Today, I will backtest the magic auto supply and demand day trading strategy developed by Ladna Trading. I'll show you how the original strategy performs more than a year after it was made, and will make improvements using modern indicators and tweaks to make it fit the current market while keeping the core principle. This strategy uses only free TradingView indicators, so you can test it yourself right after watching this video. I will be testing this strategy on the 5-minute EUR-USD chart. I chose the Euro-USD pair because it is one of the most popular trading pairs and has the lowest spreads and commissions in the Forex market, making it perfect for low time frame trading. If you are already familiar with trading other pairs or prefer trading stocks, options, or crypto instead, this strategy will work too, although you might need to adjust the indicator settings. I'll take 100 trades, risking 1% per trade with a 1 to 1.5 risk to reward ratio, starting with a $1,000 account. Let's get started right away by setting up the 2 free indicators on TradingView. First, open TradingView and click on the Indicators tab. Search for Supply and Demand Based Pattern and select the one created by Hassan Rafat. Open the indicator settings, set the Candle Health Percent to 24 and Base Max Retracement to 1. Then click OK. Next, we'll add the second indicator. Search for Ultimate Volume by CI8DH and add it. In the settings for this indicator, change the plot height from 80 to 100. That's all there is to it. Now, let's go over the entry rules for this strategy. For a long trade, the entry candle has to be green. The supply and demand indicator has to issue a buy signal. The ultimate volume indicator has to show bullish volume. If these conditions are fulfilled, we will place a buy order at the candle close. Set the stop loss to the previous market low. Set take profit at a 1 to 1.5 risk to reward ratio. For a short trade, the entry candle has to be red. The supply and demand indicator has to issue a sell signal. The ultimate volume indicator has to show bearish volume. If these conditions are fulfilled, we will place a sell order at the candle close. Set the stop loss to the previous market high. Set take profit at a 1 to 1.5 risk to reward ratio. Now let's quickly run the backtest. Here's how the old strategy performed. The win rate was 44%, which is profitable given the 1 to 1.5 risk to reward ratio. The gain was 36%, which over 100 trades turned our account balance from $1,000 to $1,361. While the numbers are solid on paper, the account growth chart is quite choppy, showing some big drawdowns. These drawdowns can be difficult for beginners to manage and might result in losing your account if you over-leverage or trade with a funded account. One of the main reasons for that was that the strategy performed much worse during periods of consolidation. Additionally, for the winning trades, drawdown was usually very minimal, which means our stop loss could have been tighter, resulting in more wins. So let's improve the strategy. Go back to TradingView and remove the ultimate volume indicator. During my backtest, this indicator did not filter out many bad trades, and I have another indicator in mind that might do a much better job. Go to the settings of the supply and demand indicator and change the candle health to 50% and base max retracement to 0.8. I found that these settings work much better for the EUR-USD pair. Now for the new indicator I mentioned earlier, go to the Indicators tab and search for Consolidation Zones. Select the one by Lonesome, then go to its settings and change the loopback period to 5. Now that our new setup is ready, let's go over the trading rules. For a long trade, the supply and demand indicator must issue a buy signal. If there's a consolidation zone near the entry or one is developing, draw a rectangle from the top to the bottom of the zone and extend it to the right. If the entry is within a consolidation zone, don't take the trade. If the entry candle is outside the zone or just broke through it, take the trade. Place a buy order when the signal candle closes. Set the stop loss at the bottom of the supply and demand indicator zone. If the zone is higher than the entry candle wick, set it a pip or two below the entry candle wick. Set the take profit at a 1 to 1.5 risk to reward ratio for easier comparison, but you can also try a higher risk to reward or a trailing take profit. For a short trade, the supply and demand indicator must issue a sell signal. The entry candle should be outside or breaking out of the zone. Place a sell order when the signal candle closes. Set the stop loss at the top of the supply and demand indicator zone, or a few pips above the entry candle wick. Finally, set the take profit at a 1 to 1.5 risk-to-reward ratio. Now, let's start the backtest. I'll show you some of the trades I took so that you can check if you understand everything. Try to identify the setups and confirm if they are valid before me, as a practice exercise. Finally, let's look at how the strategy performed. The updated version did much better. This time, the win rate was 55%, which is 11% more than last time. The gain was nearly 90%, more than double what we achieved previously, increasing our account balance from $1,000 to $1,890 over 100 trades. Another major improvement is visible in the growth chart, which is now much more consistent. This is not only better for your trading psychology, but also safer when trading and perfect for growing funded accounts. By filtering out many false signals during market consolidation and optimizing the indicator settings, this strategy has become much more reliable. If you think it suits your trading style, make sure to backtest and forward test it yourself. This will ensure that you understand the rules and feel more confident while trading. Aim to backtest a minimum of 100 trades and forward test it for at least a week on a demo account. Remember, risk management and trading psychology is also just as important as a good strategy. So, avoid over-leveraging and risk only 0.5% to 2% per trade, depending on your account size. If you'd like this or any other strategy to be explored further or tested over a longer period, be sure to leave a comment, and I'll try to make that happen. If you learned something new, please like and subscribe. Thanks for watching, and good luck.